So how well have our predictions and our market updates worked out? Check out our first in the series over the next several weeks. Hi, Jim Gore from THOR Wealth Management. A lot of people have the misconception that here at THOR, because of our THOR indicators are saying the U.S. stock market is expensive, is that we are holding a lot of cash. As a matter of fact, we are not holding a lot of cash. We are fully invested with our clients' money. We have less than 1% of our total assets under management in cash, and that cash is there for clients that are taking it out on a monthly basis. Otherwise, we are fully invested at this time. We are active, and we do invest in other markets. And what I'm going to do in this market update and the next couple ones is go over some of the things that we are invested in that are not in the U.S. market that we talked about in the past, and let's see how those things have performed. First and foremost, let's look at what we had as a market update just back last February. And this was looking at gold mining stocks, right? And so this is an alternative investment. Even though they are stocks, they are really material and it's related just to gold. We like gold mining companies instead of gold because they actually perform much better than gold when gold is going up. Well, you look at this just since February of last year, you can see that the stock market has done fairly well. The S&P is up 24%. The equally weighted index is up 15%. But look at gold miners. Gold miners are up over 140% in that time period. They've significantly outperformed the market. So when we're talking about the Thordex, that the U.S. stock market is expensive, that's just one market. This is a different market being in gold miners, and you can see that they have significantly outperformed. And we think that this is the start of gold, and it's going to be a long run coming up here. It usually runs for several years, and the run right now, we're only maybe 1/3 of the way through for gold miners. And let's talk about what has fundamentally changed and why you want to have gold in your portfolio. And let's look at what the federal government is doing. This is just looking at interest on the national debt right here. And you can see it has exploded. We've gone since 2020, we were paying $508 million annually in interest payments. It is over $1.2 trillion in interest payments alone. So when you're hearing that the deficit is over $2 trillion, well, interest alone on the debt is $1.2 trillion of that. And this has exploded out. And you can see the line here since 2020, as interest rates have gone up, this has really caused a problem with the national debt, and that why the debt is going to continue to grow in the future. And something has broken. And you can see this here. This is looking at the federal deficit or surplus, and really things have changed since 2000. That we're seeing continued deficits, and it has continued to go down, and we're having more and more deficits. That's just the annual deficit that adds to the debt, and then that adds to our interest payments alone. So it's a compounding effect here. But since 2000, something has dramatically changed. And there's two things that I think have occurred in that time period. And that's looking at this chart here in 2000. If you look at what is happening here with the federal debt, in 2000 to 2002, we had a disruption in the market. And we had what is known as the Greenspan, the Fed put, if you will, that the Federal Reserve is going to bail out anything that's bad with the economy. And they have, but it's come at a cost. And you can see each time period from 2000 to 2008 until we had the Great Recession, if you will, all of a sudden you see the line and the arrow go up. That's QE. Then what happened is we had COVID, and it's even gone up further from there. So it's a combination of the Federal Reserve printing more money as well as the government spending more money that has been the cause of our deficits going up since 2000. Note here in the very bottom, I've got a note here. The national debt is right now close to $40 trillion. However, if you counted for unfunded liabilities, which are Medicare, Social Security, veterans benefits, as well as the pension benefits for federal employees, the national deficit right now is $125 trillion. So this is something that is a compounding effect as we keep on adding more and more debt, more and more interest payments. What the government's going to do is just continue to print more money, which is why you want to have gold and a better way to play it, gold miners in your portfolio for the near future, because the dollar is going to be continued to be devalued because of excessive printing. If you have any questions about THOR Investment Management or need help with your portfolio and diversifying, especially into different markets, please give us a call or reach out to us at thorwealthmanagement.com. Take care and look forward to talking to you in a couple weeks.
Subscribe to the THOR channel today.